Bernd. Bernd is in the room now. Bernd, yeah, he is coming. So I don't have to introduce him again. So he is the head, he is the brain behind ECBN and the long-time contributor and also the CEO now of EIT, CC, as we call it internally. And he will talk a little bit about investment and how we can relate. So go on, please.
Yeah, thank you. Yeah. Could I have my slides, please? So I'm just giving a small introduction into our investment strategy. As you know from my first speech, this is being developed now also in 23, but you get it here just as with our programs, a sneak preview. Just to remind you, we have a few industrial strategies for the digital and green transformation. And Kirsten, I heard your point about digital and green, so well taken. And along those challenges which we have in those sectors to be green, we want to develop also our investment strategy. What do we know about the investment market in the creative industries? You have heard already that we are having a big lack of data, and this is also the same, it's true for our investment markets. We have sourced in our application phase diverse data banks trying to bring together as a kind of observatory, which we are not yet, but to have an overview. And here is just a little from one of our partners, the Scale-Up Factory in Geneva, an overview of the different investments which are taken and also unicorns which have emerged from our sector. If you take it more aggregated, it looks like the investment market in the venture capital field in our sectors, in event, fashion, gaming market, marketing, media, music amounts up to almost 30 billion euros per year. In comparison, health, fintech, and transport reaches between 50 and 80 billion euros. This is by far not complete. It's just an incident. And it's also part of our knowledge tank to generate really valid data, but it gives a size we are up to. We have no really data on the business angel investment, no really overview of crowd investment, so still a lot to do. But what's clear for most investors, if it's philanthropic investors or creative venture capital, creative industries is phrased as a risky market. They see it as a no-go. We really have to explain it heavily. And one of our strategies in the field of our investment market is simply also investor training and education. We will not name it like that because it's not going to be fun for a venture capitalist to go into an academy. But while we are interacting with them, there needs to be a learning about the creative industries, especially also if we look into the tasks and the opportunities, also the business opportunities which Kirsten showed in all the transformation which are happening. We also learned this will not be a usual venture capital business opportunity. It will not be a quick exit and maximization of profits, but rather of the common good. So our investment strategy is also then harvesting these diversity of angles we have. Yeah? We cannot just rely on the classical venture capital or business angel approach. We have to widen the scope, not only because many partners in our sector are non-profit by themselves, like the Cultural Heritage Institution, Centre Pompidou, National Gallery London, you name them. They're all big elements of transformation. But they won't do it for the profit. They do it for a higher aim. So how do you mobilize funding for this? We can expect, given all the risks for public budgets, that public spending will hardly increase for those change makers. They have to find new capital markets. So the aim of this kick is not just to maximize venture capital or to unify this and to have a more transparency about this classical market, but really to build a diversified investment market for the creative industries, and it's a different task we are up to. So you see this spreadsheet here, this overview from angel investors to the classical venture capital, and then extending this to microlenders, debt financing, philanthropic funding, and crowdfunding. Just to give you one example of the fantasies we're having on the table, you know, 23 is our development year, so we're coming a lot of proposals, and one of it is in the field of cultural heritage, imagining the 10 biggest cultural heritage sites in terms of tourism. Cultural heritage and tourism is, of course, also a business and is also on risk by the climate crisis and change. So investments in this field must not only protect tourism, but also social cohesion, must protect heritage in itself, make, you know, tourism also more green. So likely, first estimates come up easily with an investment of 50 million euro per site. So if you take 10 sites, you know, you have 500 million euros to invest. That might sound like a lot of money, but for venture capitalists, this is kind of the minimum ticket to start. And if you kind of collect the risks and turn it into a fund to invest, people might see here an investment, and we can maybe harvest and win private investors, which have also an impact interest and not just a capital interest. So that's the task we're up to. And I just give you an early warning, so to speak. Now, what are we doing next year? Next year, we are looking for partners who are building incubation structures, who are building structures to welcome investors, but also find startups to invest. So those are the two pillars, find best enterprises or best cases, also best philanthropic cases, and on the other hand, find the investors. If you break it down, the priorities, and Garen asked me to do it really quick, those priorities are really finding another 35 investors next year. We have already 8 investors listed. They manage some 8 billion euros. And the great task will be to convince them that part of this 8 billion should go into our sector in 24. So the year 23 is really kind of educating, motivating these to shift their funds. We will also see what happens to the investment market because of the changing capital market. You all know interest rates are rising. So dumb money, as it's being called, money which you can get for almost 0% interest rate is out. And this will also change the area. Some will say it will, you know, increase the chances for the really good investments because all the dumb and stupid are out, all the fun investors and the fun attempts just to start a startup, you know, to run it for a few years and then sell it for 100 million, knowing it is not sustainable. All those things hopefully might vanish, but obviously it might be also a risk to serious impact investments. So in this difficult situation, we now try to find another 35 investors. And I can really say my talks here today in Prague already led at least to one more investor. And Petre and me already agreed we will come back next year in 23 and work on a local investment meeting to harvest this for the Czech Republic. Then, of course, we have to look into deal flow. How do we find not only the startups, but this is the unusual take here, where do we find really experienced mentors? We decided not only to give cash and capital, but also knowledge, talent, you know, help startups to manage these funds and to manage the VUCA surrounding they are working in. And last but not least, we have to do something very practical. We have to find places where all those meetings can take place, pitching places, pitching events, places where the investment forum can take place. So the classical approach would be we build our own investment forum, build our own pitching events. But as you know, we want to work cross-silo and cross-sector. So I rather favor to work together with those which are existing. But also Caroline said, you know, how do we move outside of our bubble, not talk to ourselves, talk to other sectors. So if you have ideas where startups from the creative industries could meet, with other startups, not from our sector. Yeah, happy again to learn and to start this journey with you together here for the Czech Republic. Yeah, thanks for your attention, and this was the short version.